Stop learning from your mistakes on a live account. It's too expensive. I spent the last few months testing this CRT/CCT model to see if I could actually make money with it or if it's just social media hype. The results from the October till December tests were actually surprising. Let's look at the data. To be honest, this is my first real video on this channel. I'm not a trading guru and I'm not here to sell you any lifestyle. My name is Dominic, or you can just call me Everest, and I'm here to just show you the real data behind the system I'm trying to build using CRT and CCT concepts. I spent the last few months breaking down this model, refining it and stress testing it. Today I'm going to show you guys the logic behind it and the actual result from a 3-month backtesting data. Stick around because the results are actually surprising. The November's data was actually a nightmare, but I'll show you guys how I actually survived it. So before I show you guys anything, let me first explain what the CRT and CCT model is. So stop looking at my ugly face and let's get to the charts. Alright guys, first things first, let me show you guys how a candle forms. Just a simple explanation of how a candle forms, and I will now move into explaining how I use the CRT model and the CCT model. Let's get started without wasting any time. So this is a bullish 4-hour expansion candle. So how does it work? How does it look like on a lower time frame? On a lower time frame, let's say the 15 minutes or lower, or the 1 hour time frame even, you'll see something like this. Maybe price plays around a little bit here, then price goes down, take out this low or react from any fair value gap from any previous candle that was there before. How the wick of this candle is formed, right? So we take out the low, then after this price expands, maybe you will see a retracement and another expansion. Price then goes crazy high and then come back again, plays around, and then close. And this is just a basic structure of how every 4-hour candle looks, how most candles look like, most expansion candles. This is how they look like, right? So this area is the wick. This area where price reacts from this and then closes above here. That is the formation of the wick. Then we have the body area where the main expansion happens. That is this area like this. And then we now have the top wick, right? So right, let me just show you guys one example, one or two examples, then I move on to the next part. So let's just start like that. So let's pick a random candle here. So assuming I pick this candle, let me mark this one here. It's a low and that's the high of that candle. I'll use an arrow to indicate the let's come down using. That is one. Let me pick another one. So let's pick this one before it's this is low and that's the high. So I just picked two random candles to just explain this thing for you guys so you understand it better for those that don't know how a candle is formed. So this is the 4-hour time frame. Now I'm just going to go down to the 15-minute time frame. You guys can see how it looks like. So now you can see the two areas I picked, right? So the two areas I picked. Let's start with the first one. Now 11 o'clock. This candle started from here. You can see it's a bearish candle. It started from here like this. Let me widen this so it will be easier to explain for you guys. Alright, so now you can see the candle opened here, went up a little bit, came down small. This is the formation of the wick. Went up and closed above all these up close candles here, right? And you can see price went up, back a little bit, went up, pulled back a little bit, went up, and then finally closed at this level. You can see, right? So we have the wick area, which is this area like this. The wick is the body of the expansion candle. This is the body of the expansion candle and see top wick here. That is one of it. Now this candle technically will not react from anything yet. Not actually react from anything, but we created an order block. You guys know how an order block is created. We created an order block. Let me show you guys. You can see here price took out these highs here and then close above it, getting what we call a CISD. You guys know what CISD means. So that is how a CISD form, even though price does not react on anything exactly. But if you look closely, you can see that price is actually reacting from some lows here. You see one reaction, another reaction, and this is the third reaction here. That is the kind of support area where price is reacting from. Alright, so that's that. So that is one of the examples. Let me show you another one. So here we have another candle here. I think the opening price is here. So you can see here price opened, went up a little bit, came down, took out this low and reacted from this fair value gap here. Went up straight. Yeah, there was no pullback until price pulled back here, went up again, and then finally closed around that area. You can see this, right? Now if you look at this one here, you actually had a reaction. Reacted from these lows here. Reacted from these lows here, right? Reacted from these lows here, and we also have a fair value gap. If you can look closely, for those that know what a fair value gap means, we had a fair value gap here, then price created CISD. They just closed above these highs here, and then from there just started moving upwards and the close. So you guys can see how a candle forms now, right? Alright, so guys, now that you know how a candle forms, let me explain the CRT model and the CCT model. So you can see on the left of my screen, this is how basically a CRT model looks like. And on the right of my screen, here is a CCT model. The CRT model stands for candle range theory, and it's basically a reversal model, right? Where if a second candle sweeps the low or high of a previous candle but did not close below it, you can see in this demonstration here, right? Now look at this candle. The wick took out the low of this previous candle but did not close below it and closed inside. They are kind of most likely going to expect a reversal on the next candle that is going to form. So you can see this candle expands to the upside. Then for a CCT theory, which is candle continuity theory, for this case, we just when we have all we're just expecting is that price will continue in the direction of a previous candle, right? Like in this case here, a candle here is a bullish expansion candle. So we are expecting the next candle to also be a bullish expansion candle in the direction of the previous candle. So that is just the difference between the two. And I'm just going to show you guys how I use this. So let me start with the CRT model first. So for the CRT model, remember we're anticipating the next candle to move upwards, right? Remember I told you how a candle forms. So now this is the weak area, right? All we just need on a lower time frame, assuming this is a 4-hour time frame, right? All we need is to look for an entry when this week is still forming, or at the formation of this week, where we need to look for our entry at the formation of this week here. Right? So what am I looking for? In a lower time frame, I'm looking for something like this. I'm looking for something like this. Once this candle opens, it goes down into either it reacts from a previous low or a fair value gap I was there before, right? And then gives me a change in state of delivery. And then I look for my entry, and then I trade the continuation, targeting 2RR, right? So let's say I have a fair value gap somewhere around here. So and then price finally close here above here like this, giving us a CRT. I'll explain. I'll show you guys an example of this. So there's no need for you to worry. So price close above here. My entry will be somewhere around there with my stop loss at this low that was formed. And then I'm going to just target is 2RR, which is basically the expansion of this candle. And if this candle closes on the higher time frame and I have not hit my TP, I'll just close my trade wherever it is, right? So I just want to see if I can hit my 2RR within this candle. That is just it. Let me show you guys how it looks like in a candle format. So we have our candle open. Let's say one candle shows up. This is a bearish candle. Price move up a little bit above here. Remember, it has not tapped. Let me expand it so you guys can see. Right, so this is our first candle. Then price then comes down, tap into this fair value cap, and then goes back up and close above this area. Right. So what I'm looking for now is to enter. As I see this close, enter at this place, right? And I'll just target my 2RR, allow price to do its thing. You get. So this is just basically how the model works. So this is the entry model. This same entry model is what I'm going to use for the CCT also. This exact same thing here. But now the difference is that in this case, what made me to look for a buy here is because of the candle swept here. In this case, I will need a candle to close above or below, depending on the direction, right? A previous candle before I now look for this entry pattern to trade the continuation, meaning that in this case here, I will look for this same pattern, but in on this candle, not on this candle, right? So I need a close to confirm my direction. So basically, you're just using the higher time frame candles to look for direction instead of using the standard market structure or break and retest and all those boring things. You get the point. So what I'll just look for here is the same thing. Price comes down, take out a low or that from a fair value gap, and then give my entry and take it. So enough of showing this chart work. Let me show you guys some examples of all this thing. Using the examples I showed you guys the last time. So this is for our time frame. Let's start by using that example I showed you guys the last time, right? So I guess it was the first one. It was the first one. Now here you can see price took out this candle's low. I'll just mark it there like that. Took out this candle's low. And then took out this candle's high too. Technically, how I use the system, I will not take this setup, right? But for now, I'll just show you guys for example's sake. I will not take this setup. So what I'm looking for now is to trace the week, this week of the next candle. Let me just mark it out so you guys can see what I'm explaining. What I'm looking for is to trade this week or the next candle. But technically, I won't have taken this setup. I would have skipped it and look for the next setup, right? So, but for now, just example sake. So let's go to lower time frame to see what happened in that place. Remember now, because of this candle took out this low, we are looking for a buy, right? We are looking for a buy on the next candle. Looking for a buy on the next candle. So let's go to 15 minutes time frame. I'll quickly show you this. It's going to be a little bit long. Alright, so this is a weak area. You can see the area I drew on the lower time frame. So let's see what happened exactly. I think I've shown you guys before already, but so this was where the candle closed, right? In this case, we do not have our last low. This was where the candle closed on this place. So our current low was supposed to be here, right? That was our low. That's because there's no fair value gap anywhere. This was the low we are looking for price to take. But you can see here, price just came close to it and then went up and then closed above this. This is the CIS angel telling you guys about. This is how it looks like. Oh, it's just an up close candle. Price takes out a low or you have from a fair value gap and then close above. Right. So assuming that price took out this low, my entry would have been on this candle, right? Because of it closed above this candle on the body. I use the body. So my entry will be here, my stop loss somewhere around here. My target is going to be 2RR, no SL, no break even, nothing. So now in this case, you can see that price actually hit our TP before this candle closed. This candle closed on this bar here. This one. But we hit our TP or the candle closed. So that's giving us a 2RR profit. A 2% profit for those that reach 1%, right? This is one example. I'll show you guys another example again. I'll show you like 3 more examples, and I'll go to the backtest results so you guys can see what I got by backtesting. So let's go back to that area again. That is example one, example two, Now, this was the area we did, right? Now you can see this next candle, right? Let's clear this out. On this next candle, you can see that price closed above this candle. So meaning that we are going to use a CCT model this time around. So now let's see what happened during the week formation. This is the weak area, right? This is the weak area. Alright, so now let's see what happened. This was where the previous candle closed. Here. This was where the previous candle closed, right? So let's remove this now. Now we know what we're looking for. Now, if you look below that candle, you can see there is a fair value gap here. The fair value gap there. This is a fair value gap. And there is a low here, right? So we need price to react from this fair value gap or this low and then close above the highest price on the previous candle, not on the current candle. Alright, this is the current candle. You're not looking at this one, you're looking at this previous price on the previous candle here. So this is what happened exactly. As you can see here, price reacted, went back upwards, and then closed above here. Now the reason why I always look to enter at the week is so that I'll be able to catch that expansion move, because if I try to enter a continuation trade, you will see that I won't get the chance to catch the remaining move. I might even end up losing the trade because of the candle might pull back during the middle of its formation, right? So now we close above here. My entry is going to be on this high. My stop loss at the protected low, which is that week that was formed. And now you can see in this case here, the candle closed here without giving us our 2R. This is my 2R targets. The candle closed here without giving me my 2R targets. You can see where the candle closed, right? Now, if I had to leave, I can decide to set break even here, which is a good idea for some of you. My back testing, I noticed that that is not actually the best option. You guys will see the result very soon. The best option is actually to close here at whatever profit you get. It's better to make small profit than to make nothing at all. Right? So here you can see I only closed this at 0.6, around 0.6 RR. You can see. So I'll close my trade there because the 4-hour candle has closed. I'll close whatever remains in this place. You would have seen that if I had not closed it, you would see that I'll eventually end up losing this. Right? We're only focusing on the next candle. Anything that comes after that is none of our business. This example. So let me show you guys just one example. Sorry, this video is going to be long, but if you can enjoy it, you're going to learn a lot from it. So let me show you guys one more example. Let's see. Okay, let me choose this one. Let me there's going to be an entry there. Let me just choose to reverse setup. So here you can see here we have an inside candle. One rule, anytime there's an inside candle, skip the setup. Anytime there's a candle that took out two candles at once without closing above the second place, skip it. So these are two setups to skip, right? So here now, we have an inside candle, we skipped it. The next candle then took out the low, the high of the inside candle, right? This is the inside candle. Maybe I will explain this in another video, explain it in details. This is an inside candle, right? This is an inside candle. You see, we took out that high and then we closed below. So meaning that this is a continuation model. Let me just draw the wick out. So that is what you're looking for. This is so I won't waste time changing time from up and down, right? That is that. Now let's look for that one again. We have this one here. Price took out the low here, meaning that this is a reversal setup. On the next count, we are going to look for a buy. Right, so just two more examples. So these are two. So let me just focus on these two examples, then I will move to the backtesting results quickly. I don't want this video to be too long. Right. Let's start with the first one here. In this case, this was a very easy setup. Let's see. This was where price closed, and you can see in this case, unfortunately, we reacted from the fair value gap before the next candle. So we missed the entry on time because the entry happened before. Now that we entered from the fair value gap, I won't enter here, right? Don't make the mistake of entering here because in this case it worked out now, but in some other setups it might not work out, especially when the market condition is not good. So what will I do? I will now mark out this high, wait for a reaction there instead. If I not get the reaction, then fine, I leave the setup. So in this case, you can see we did not get any reaction. Price just went out, went down, continue going down, pull back, continue going down. Nothing happened here. So let's look at the next one. The next one here, this was a candle that was swept. This was the weak area. Now this is where the next candle starts. And now I'm going to show you guys something here. Wow, to keep the setup. This is just me basically showing you how I'm going to skip some setups that are not worth it. Right? This is where the next candle starts, meaning okay, we need to first take out this low or this low, which is it, right? Okay, I would have entered this actually. This is a loss. So we took out this low, right? And then price came back upwards. Oh, okay, you see what I'm saying. Here now the highest point is on this candle. You can see why I would have skipped the setup. The highest point is on this candle, not this one. This is the 11 o'clock candle, meaning this is a new candle we are currently on. And we are not looking at that. We are looking at the highest point of the previous candle. Is this one here. So I'm looking for price to break above this to confirm my week. And you can see in this case that did not happen. Instead, what the price do? Price played around and took out a low, another low again. Once the second low has been taken, I'm leaving that setup. You guys get once this low has been taken, I'm leaving this setup. It's not worth it again. You can see how price took out one, two, three before actually coming. By then, most of the count has already finished. There's no, you can see there's no even time to the count ended here. There's no time to take the next trade. So you guys can see what I'm saying. So now that you guys understand this, you can take your time to backtest it on your own to see what you can change or what you can improve. But for now, let's go to the backtesting data. This is the website I use. This is Traders Casa website, and I'm using the free version, which you can only backtest up to 6 months, right? These are all the backtests I've done so far. As you can see, only 3 of these backtests actually gave me money at break even because each of these backtests I started at $1,000, right, for each of these backtests. This one just fairly above break even. This one is actually my highest results, which is what I'm going to use to improve this system on my next video or the subsequent time, right? You can see here I moved $1,000 to $3,000 within 2 to 3 months on this one. Here, this is the current one I backtested. You can see I moved $1,000 to $2,931 on this. Let's look at the result first. I was not able to have the time to compile this into a neat table format, right? So you guys might not see most of the things. I'll show you guys as much as I can. So let's go to trades. Yeah, I'm going to select that CRT and CCT model. Right. So these are the results. You can see because I'm using the free version, most of these things are locked. If not, we're going to see more information. Sorry about that. The video is already very long. I don't want to be longer than how it is. So let's look at the table. You can see the trades. Right? So if you look at this was the first day, 6th of October 2025, right? This was, if you guys remember, 2025, October, September, October, November, when that time when there was bank holiday, right? Market was not that stable like that. But you can actually still made money with the system during that period. So if you look at the first trade, not a full TP, as you can see, just $61 profit. Then we now had 3 consecutive losses, one full loss, another full loss, another full loss. You can see how the system works. You will not make profit every day, right? Then we now had, I think this was a full win, full win, small loss, small win, big win, big win. You can see sometimes we make small win, sometimes we make big win. But at the end of the day, once you check everything, you see that everything will go well, right? So this is how it is. So you can see generally October was good. October was good. I was able to move this account from, I think I was able to move it to around $3,000. I guess wasn't exactly around 3,000 during this October slash the first half of November, right? So October was playing. You can see just small losses. You plenty win small losses, but look at November data, right? Now look at this. At 1, 2, 3, 4, 5, 6, and all of these, apart from this one, were full SL, full SL. At this point, actually, I was actually thinking of giving up, like saying the system does not work, which will bring me back to my first trap of always switching system. But I told myself I must finish this thing to the end. And because of these losses, I actually ended November on a break even because time I entered November, I was around 20 something, 2000 something dollars, right? And I ended up in $2,000 too, right? Then December when most people don't trade, you get December, I was able to recover some of those losses back. As you can see, my losses were just a little bit fewer, and then I had winning streaks. One, two, three, four, five, six, seven. Seven winning streaks, which helped me to bring back my losses. You can see some more losing streaks. This is four losing streaks. But you can see that it does not actually matter whether you have winning streaks or losing streak, right? It's still making more. Now, one thing to note from this, I'm going to show you guys some of the trades I took, right? So let's load that. One thing to note from this, October was a very good month on this system. I made more than 100% on October. By the way, for context, when I was doing this back testing, I risked 10% per trade. How I trade my live accounts, right? That's my only risk tolerance. Not everybody can risk 10%. So better use your risk tolerance, right? So October was a very good month, right? Then November was a break-even month, meaning I did not make anything on November. I might even say I made small loss during November. December again, I now made small profit. So you can see how this thing works. This is the reality of trading, right? Depending on the system you're using, though, there are some people that actually make profit every month, but it's not every system that will give you profit. Actually, I would say 80% of the system will not give you profit every month. This is reality. So you can see now, October I made big profits. That's one of my big profit months. November I did not make anything. December I made some profits. You get, so that's how it is. So let's say you decide to start using this system right after you have back tested to know. Maybe I'll teach the system in details in another video. So like I'll show you guys more proper examples on the system right in another video. So let's say you decide to start using the system. You might be unlucky that month you start using the system will be a month you lose. Like you lose that will be a losing month. It does not mean the system does not work, right? All it means is that a winning month will still come later, right? This is a long term game, not a short term game. So let me just show you guys few examples, then I will end the video because the video is already too long, right? So look at this. Look at this example here. Just the entry. You can see here price pulled back, corrected from this fair value gap, and then finally came back to close below this. This was a full TP. You can see that was a full TP. One example. Let's see the loss. Right, you can see this was a losing trade. What happened? We followed the rules exactly. Price pulled back into this fair value gap, went up and broke above this, and then not strong enough to continue going, and then we got stopped out. We have another loss here. Here, price pulled back all the way. Let's see what happened here exactly. Hmm. Okay, I guess it was a mistake trade, which can happen too. I think you can see that mistakes was actually here, but at the end I still ended up making profit. So I think it was a mistake trade. I wasn't supposed to take this. Let's look at the next one here. Here now you can see here price took out this high, went down. I did not enter here. I did not enter here. I waited for price to actually take out. I think that was this one. You can see this. I did not wait for this. I did not wait for this. I waited for price to take out this one instead, which is the low of the previous candle, and then I hit my full TP. That is out about that. The video is already too long, so let me cut this here. Honestly, the main reason I'm stressing this module so hard is because I'm tired of the chain. The one where you learn a system, you lose a few trades, you get frustrated, and then go look for the next holy grail. I've been there, and I know how many beginners are stuck at this level. So I've decided I'm done with that, and I'm not going back to the live chat fully until I've set it on one system. I know I understand very well with data exactly what the outcome is going to be. Even if it means months like November, where I'm going to be grinding at break even, at least I'll have that clarity and not be guessing. You know. I am already working on an updated version of this system where I included a fair value gap to make my entry more precise. I'll be dropping a full backtesting video, probably my next video or anytime soon. So if you don't want to miss that video, make sure you subscribe now and leave a like, and also leave a comment too. My name is Dominic aka Virus, and I'm going back to the data. See you guys in the next video.